Hello everyone, my name is Binay. I'm a certified public accountant in the state of California, and I'm following my PhD studies in the University of Tirana, Albania. This study tries to evaluate the application of the International Financial Reporting Standards, IFRS, in financial institutions in Albania. Before, I have also done an evaluation of application of IFRS for non-financial institutions. Financial institutions in Albania include both banks, insurance companies, and also other financial institutions that do not classify as bank or insurance companies. The agenda for this presentation will be as follows: introduction of the study, development of the accounting system in Albania. This is a review of the accounting background in Albania in relation also with the development of the economy in Albania from a communist system to open market and democratic system after from 1990 till today. Later on, we have a literature review of studies related to IFRS, methodology used for the study, discussion of the findings related to the study, and at the end we're going to do a summary of conclusions and the recommendations. Introduction. This paper evaluates the degree of implementation and application of IFRS in Albania related to financial institutions which are foreign or domestic. Foreign means foreign investments in banks or insurance companies or other types of financial institutions, while domestic, the shareholders of these institutions are not foreign companies but are domestic investors. And we consider for this evaluation of IFRS application transparency of the financial statements and also comparability of the financial statements, meaning that we evaluate how comparable are the statements that we get from different companies that classify as financial institutions. In the past 25 years, Albania has went through drastic changes in its legal system and also the related financial reporting for companies. So there are two moments that need to be mentioned for these changes in the accounting system in Albania. In 1993, the first law of accounting, which settled the framework for normalizing accounting in the country after the breakdown of the communist regime. In 2004, the implementation of IFRS for several companies in Albania, especially banks, financial institutions, and big companies that are listed in the stock market. So the requirement to apply IFRS after 2004 are listed companies, commercial banks, financial institutions, insurance or insurance subsidiaries of listed parents in stock market around the globe, companies that exceed criteria of turnover $11 million, and also the number of employees more than 100. Literature review. According to Relau in 2012, with findings from Romania, IFRS increases transparency and credibility after the application of the standards in Romania. Hope and Al in 2006, with a study from 38 countries, have found a positive relationship between international financial reporting standards and the increase of foreign capital. By et al. In 2006 have concluded that economy researchers and analysts benefits from IFRS implementation due to comparable financial statements and data, which allows them to perform better projections for the future. Tsakumis and I, in 2009, have pointed out two factors that affect IFRS benefits, which are quality and comparability of financial information between countries. Tarka in 2012 states the IFRS application for companies may vary between countries due to difference in legal enforcement and changes in national accounting standards. Lee 2010 also states that although countries that have applied IFRS benefit from the reduction of the cost of capital and from increased disclosures and improved information comparability, but the reduction happens more in countries with a strong legal enforcement. Now, considering all that we said in literature review, we have applied a methodology that actually reviews one particular IFRS standards, which is related more with financial institution, which is financial instruments, IFRS 7, to evaluate, and we evaluate disclosures related to credit risk, hedging, income statement structure, liquidity risk, impairment of available for sale securities, to see if the IFRS application is proper. As methodology, we used questionnaires for 15 accounting experts and 5 trainees of IFRS, and also a chosen panel that have reviewed the financial statements of 15 foreign and domestic financial institutions. This review helped in understanding main problems areas in the quality and comparability of IFRS financial statements. Discussion. Most from the review and the questionnaires, the following issues came up. Most of the non-bank financial institutions reviewed failed to fully disclose relevant information on accounting policies. IFRS financial statements transparency and comparability shows positive correlation to the type of the company, foreign, private or publicly held, and domestic, meaning that foreign companies show better compliance related to domestic company. Financial institutions, financial statements reviewed varied in quality of liquidity risk and disclosure. Most of the institutions provided general information of these areas of review, with banks having more in-depth than the others information. On the income statement structure, most of the financial institutions, especially banks, show transparency and comparability. According to the questionnaires, additional training is needed on how to improve disclosure of significant components and increase transparency of financial position. According to the experts and to the questionnaires, Albanian companies perceive the process of IFRS implementation and application as an ongoing costly process. IFRS implementation is not complete, and for 11 years now it has been updated with changes and improvement, which has also been accompanied by cost of training of personnel and improvement of software that will be continuous, with standard changing and improving continually. In this graphic we show the relation between domestic and foreign companies, with factors that are used to evaluate transparency and comparability, such as credit risk, hedging, income statement structure, liquidity risk, impairment of equity security available for sale, and so on. So here we show that foreign companies show better compliance and implementation of IFRS standards, showing better quality and comparability for the areas that have been evaluated. Conclusions and recommendations. All financial institutions, including banks, need more in-depth analysis and fuller disclosure of policies and management of hedging, impairment of equity instruments classified as available for sale, income statement structure, liquidity and credit risk. Transparency increased going from domestic to foreign institutions and from non-bank financial institutions to banks. It's imperative to improve the professional background of accounting and auditing professionals in order for them to prepare high-quality financial statements and to conduct high-quality audits. On the other side, we see that liberal law enforcement for the compliance with IFRS and lack of penalties actually have a certain impact in the quality of the financial statement related to the IFRS standards. Questions, please send the questions to the following email. Thank you very much and have a wonderful rest of the day.